Hello, fellow traders. Now you are welcome to online forex class. And then today, the last time we came on board, we learned about entry, and then we have to move. We're supposed to move to exit today, but then I felt very strongly convinced that I must not move forward until I have done something more on entry. So we are not going to stay in the class today. We will be going to the charts, to work on practical aspect of it on right there on the chart to show you so many things, especially about the rejected candle, which is very, very important in entry issue. So all of those things, how to enter, everything that has to do with entry. So we'll be doing that. So right now we are not going to stay in the class. We are going to the chart, just like I said. So I want you to pay attention. If you have to get your laptop or even your phone, just to have idea of what I'm about to show to us right there on the chart. So I think we should go there now before we don't have times in our hands. So see you there. Thank you. Here we are now on the charts, and then I want us to start quickly because this video may likely be a little bit long, and then I want you to please bear with me because anything that was doing well. So because we have a lot to learn, and then I don't want us to be in a hurry. Let's be patient and make sure that we get this thing right, because by the time we move forward from this one, we are going to the next topic, which is exit. So now that's why I want us to get this thing right before we get to the other ones. So now we are going to be picking them one by one. The first one I say, the entry points, retracement, recovery points. That's number one. Then number two, rebounds from support and resistance levels. Then that one also has to do with rejected candles. Then number three, moving averages and rejected candles. That is the area of retouch and rebounds. Then number four, breakout of support and resistance level, retouch or retest. Then the fifth one is Fibonacci retracement, which we are going to deal with also by His grace. So let's move forward. We have no time to waste. Now the first one, we say retracement recovery, just like this one. Now you see the charts before me. So at least as it is now, this is a naked chart, although with I have a support and resistance level indicator here giving us the resistance level and support level and so on. So but then I believe that you don't need a prophet to tell you that this market is on sell on downward trend. So meaning that whatever we want to do here today, we are looking to sell. We are looking to sell because we are on the downward trend. So but then when you look at the way market moves, I told you it moves in 6-star form. So just look at it. Let's look at it this way. Let's start from here. See, so when you pay attention, very strict attention to how the market is moving, it will surely help you to enter correctly. without missing anything, as you can see now. So we are talking about entry points, and the one we are dealing with now is a retracement recovery point. Even though the market break, then it went back again this level, then went back up again, form a resistance level there, and then broke this one, now coming down. So if I really want to buy right now, this one shows me that we have a breakout here, and then the retracement that happened here around this place recovered from this place, and then the market went down back. So it broke this level and continued, then retrace a little bit and then continue moving. So very soon now the market will may retrace back to this level before continue the journey downward. But then we will see how far it will go before the retracement occurs. So like this one now, so let me explain. Now as we can see, let's assume you actually want to enter into any of these ones, so you can always enter from here now. Like the market was coming down, then went back up. So from here now, if you enter from this side, this place, and then the market will come back to your entry point and then move downward up a little bit and so on. So you can see that now you are safe here because the market has not come back to this level. Let me use come back to this level. It's just it has continued. So that's number one. Then number two, we have to enter this one now. You know, we talked about this one, came back on, and then at the recovery, this area now, you can also enter from this place. So at every recovery is a safe place to enter. See this one now. Every recovery level is a safe place to enter. At every recovery level is a safe place to enter. So sometimes it will take you a lot of patience to spot this, especially those who have not trained their eyes to see the naked charts, how it moves and so on. It is not a sin to have some tools, trading tools that will assist you in getting things right. Like I'm going to show you some default indicators that sometimes I use it. So it is not a matter of you say you want to be a professional and you are trying to act like one when you are not one. If a default indicator on this MT4 will help you to get your things right, why not use it? Why are you deceiving yourself? Who do you want to be? You want to be a profitable trader, not Lagbaja or Tamedu. If you are trying to be like Lagbaja is trading, you want to trade the same way he's trading, you don't have the same knowledge. And you do, remember I always tell you, do whatever works for you. Even if it takes you to use 3 or 4 default indicators together, once you are using it and it's working for you and you are getting it right easily, then why not continue? Why not continue? By the time you continue and you are practicing with it and you are working with it, you continue to improve there are so many things you begin to filter out of it, so that it will become less and less, cumbersome. It will become simpler and simpler every day as you are using it. And the more you are doing that, I tell you, your income begin to improve. Your income, the way you make money, the rate at which you make money will improve, will increase. So we are not, you don't have to be like that because Lagbaja is trading like that, you too want to trade like that, whereas it's not working for you. It's not working for you. So do whatever works for you. So this is retracement recovery points. You can see it all. I believe you have gotten this one right. So let's move to the next one, which is a rebounds from support and resistance level, which actually is the same thing, just a little bit different. What's the difference is because by the time the market is moving, okay, let's look at this area. Let's take this area as reverse we are talking about with a rejected candle. So let me clear this one so that you can see it very well. So this one now, this candle is a rejected candle, could not go further. So you can see that the sellers, the buyers had already brought the price up to this level, to resistance level, and then the sellers now pull it down. So what it meant is that this level rejected the price, didn't allow the price to thrust forward or cross break this level. So now came back here until the sellers were able to take over permanently, just like this now. So this is a rejected candle. There are so many of it. If you look at this place also, we had the same scenario. See, the same scenario. This is another rejected candle. So it may occur like this one now. The price is rejecting this level now. This is a rejected candle. This is another one forming now. So you can see these are rejected candle. This one is also a rejected candle. So they always signify that okay, let's move to this place also. Why we want to have the retracement is about to occur. So then we had a rejected candle occurred here. So this one now, this one means, I told you that it may likely move back upward before continuing the journey downward. So which means the retracement is about to occur here. That's why we have a rejected candle. In fact, the second one is forming, and before you know it, the price will move back up to this level. And then if it is not going to resort to total reversal or retracement beyond this level, that are the first place that I marked, the price may move backward, retrace to this level before coming down back. It is possible. So but then you can see now it's retracing back. So that's why you have to wait. Consider always when I believe that even if you wanted to enter through this place, by the time you see this rejected candle forming, surely you will have to hold on and be patient with it. Although the price is moving downward and we want to sell, don't be in a hurry, don't be too hasty. Don't be too hasty. Just wait and let the market tell you when to do things and what to do with it. Okay, now we have talked about rebounds from support and resistance with a rejected candle. Then the third one is moving average. So if you don't mind, we have to so let's wait and see where we don't before I move on to the third one, which is moving averages and the rejected candle. So we are going to use, let's say moving average. We are going to use I told you moving average is is a trend following indicator. So we are going to use period, let's use period 20. We can use 20, we can use 30, we can use 40, you can use 50, you can use 100, you can use 200, you can use 8, you can use 5, you can use whatever works for you is what you should use. So it works. 20 may work for you, 50 may work for me. So I will have to stick to what works for me and not what is working for you and it's not working for me. I'm not saying it cannot work for 2 people, it can work for hundreds of people. But if I see something working for you, I tried it, it's not working for me, I have to move forward, look for what works for me. So I don't have to say it is because you are guru and you are using this, is working for you and it's not working for me, then I have to stay there and begin to suffer. No, I will rather look for a way out for my own. I will create my own magic, and when it is working for me, that is my own magic. So now let's pick 20. We may likely, if there is still time, we may likely use 50 also, just to let you know that it is still in the same way. So the method we are using is exponential, because that one is faster than simple moving average. So so now we have it's forming. So you can see that the price is trying to test this support level that they are just broken. So we are going back upward in the retracement form. So let's wait and see what the price is about to do. It has already touched this level now, so maybe it's going to reverse back, to previous movement from this level, or it will move upward, get to this level before it moves down, or it will move back up and up. But then, as you can see, we have a EMA, exponential moving average 20 here now. So if we want to look at it, you can see this area, the rejected candle slashed through it. So from here now we had a rejected candle from it before the thing now continue downward. So if it will move, if it didn't go back to this place, it may likely touch this EMA 20, slash through it, or from there be rejected. Just like, let's look for something like that. Okay, let's look at this area. Without this, let me remove the support and resistance. Okay. Yeah, you can see now the price got to this place. You can see all this place, they were bouncing back from these levels. They were bouncing back from that level. You can see. So although it's flat for this one, came back again, then slash come back again, and you can see almost touch this one, then going back again. So at this recovery now, if you want to enter, we just enter from this place now, because the price is like the retracement is over. You can do this on any time frame. So I'm doing this one on this thing now on 5-minute time frame. On 5-minute time frame, but you can do it even if it is on one. You can see this one now, rejected candle came down and it continues like that, and so on. So this means that this place is our downward trend. This one is upward trend, which is being exhausted. So it moves in form of retracement also. See another rejected candle, very long spike, just like that. This another one spike, just cuts through this and then came back, which shows that we continued the journey downward until only God knows. Maybe it will, terminate from here, or it will slash through and move downward until it gets to this point, because we have a lot of, see this one now, see this one. So those are the places where the price is being rejected. So let's change it to 50 and let's see. See this place. You can see we had market does touch the place, and then from this place go to this place, then rejected candle, then came back downward again, a brief retracement here, then we continued the journey. And so on, like that. So all these things, if you're able to pay attention to it, it will help you a lot. It will help you a lot. You can do that on any time frame with any moving average, with any indicator, even if it is not moving average. If it is any other, we have a lot of trend following indicators. This is trend indicators. We have Bollinger Band, we have envelope, Ichimoku, moving average, parabolic standard deviation. But the ones that that is easy for you to understand and to use and to get the results is what you should stick with. Do what works for you. Do what works for you. You can use it on any time frame, on any currency pair. Let's try some other currency pair and see. You are looking for the one that is clearly moving in a direction. This one, no doubt, is on upward trend, upward movement. And then the price was romancing with the EMA 50 here, until eventually it moved back up. Then from here now, the price bounced up. Now it's trying to maybe form a retracement again. We may not know when it will be over, but surely if it will continue, it will have something to do with this EMA we are talking about. You can see the price rejected here. We use this one as a then bounce from this place with this rejected candle. You can see this one now. So the price rejected twice, this place, then move back upward. If you enter from this place, you can't lose your money, because ever since then the price has not come back to to this level, continue and continue, moving upward, just like that. So if you entered from here and have made something like 260 up to this level now, let's use a current, that's 246 pips right now. So, and that will be about since about how many days? To this today, yesterday, 1, 2, 3, 4, 5. This is going to be 5th day with such very huge pips. No, now we are going to break out. We actually talk about retouch and retest. Retouch and retest. I'm actually trying to mind the time. So let's look at now. Let's look at this place. The price broke after recovery from the we actually know that the price is moving on upward trend, and then there's a little retracement down here from the recovery. It moves up like that, then broke this area, and then you know what happened? The price came back for a retest, of that level. This is that level that I try to mark here. Let me use this one so I can see it very well. So now this is what we call flip zone. That is, it broke this resistance level up and then came back for a retest, then turned this place to support and then move back upward. So that's a flip zone. This is a flip zone. This is a retest. This is what we call retest or retouch before it now actually move upward. Now this is my argument concerning the area of breaking support or resistance level and then coming back for a retest. Let's now assume that immediately the price broke through this place. I enter this through this place now. So I enter markets from this place. Now I now put my just for the sake of things, I put my stop loss around this place. Now the price came back for a retest and then moved back up, although there's a spike here, but didn't get through my stop loss. But some of the times this may not happen, but sometimes it does happen. Now this is a retracement which come in form of retouch or a retest to this level, then turn this level to a flip zone, move back upward. But then let's assume I had entered here. Now the price will come back to my entry point a little bit below and then move back upward, which takes nothing away from me. Now if I say I want to the price if I say okay, I will not enter until the price come back for a retest, and this price refuse to come back, that means I will have lost some, you know. Okay, let's use this place as an example. The price broke this place. Now I am waiting for a retest to this level, which never happened. So let's assume I'm leaving my computer and I put my sell limits here now, waiting for the price to come back and do the retest so that it can turn this place to a flip zone and then move upward. That means I will miss this trade because I won't be there to think, okay, it's not getting to that point. This is where the price actually went back up. So that is just I'm not saying both concepts, one concept is better than the other, but to be on the safer side, and then also for you not to miss out a good movement. So it takes nothing away from you. Any trade that will be a loose trade will always be a losing trade. So no matter how much you analyze the market, no matter what you do about it, no matter how accurate your trade signal may be, a trade that will be a losing trade will always be a losing trade. I know sometimes you can surface the situation, that is if you are around and you are not, that kind of person that is greedy or always want to, not willing to give back to the market. So this is it now. This is, I believe you understand that one. So now let's work on the last one, which is a Fibonacci retracement. So the Fibonacci retracement, this one is a upward trend. So we are going to use as an example, since we are going upward trend, you have to plot use this place as a starting point. That is the lowest of the low, up like that, up here. So this is 0, this is 100. So now those points that we think the price will always come back from, the first one is 23.6, the third one is 38.2, the third one is 50%, first one, second one 50%, and then 61.8%. So you can see that when the price was coming back, retraced, slashed through 23 point something, didn't relent, came down, slashed through 38.2, and then didn't relent until now got to this 50%. And you can see now from this 50%, it has to, the retracement was over and it has to go back up. So from there now, what you need to do is just do your entry here, because you know that the price had already, and then if you look at it very well, we have those small, but we have a small rejected candle here now, which means that the price has been rejected twice, both candles. So this will give you, even if you are afraid of entering around this place and you allow the thing to go up to this place before you enter, it is still okay, no problem. At least you have some good respect here. So this is how you use your Fibonacci retracement tool. So these 4 points, 23.6, 38, 50, and 61. So if the price get to this place and then go up, look and pay attention to the next line. If it went through the next line, then you know that this may be the next port of call. If it didn't go back from this place, know that you have to wait and see if this place will be the. So if the price now didn't go back from this place and then just slash through to this point, know that this is almost becoming, in fact, let's now call it total reversal. So that is how to use these things. When you look at it, is to help you to know how to enter accurately. Supposing you see something like this, trade like this, and you actually want to enter, and because you see that the price is going up, and then maybe by the time you got to the chart, the price was around this place. Do you know that if you enter, if you at least, let's assume that you didn't see all this place, all this level. So from here now, let's assume that we didn't see anything. We didn't see anything that will happen. This is our so this is our blind spot. And then you got there when the market is, in fact, let's see this one now. You saw this big candle, and you look at it and say, "Ow, wow!" And then I bet it you enter. Let's assume you now enter to that. You are enter here now, and then you look down and say, "Okay, you don't want to." You know that if the price will continue, you actually thought the price will continue. You now put your stop loss, which is normal behind this. You know that the price is coming from there, so, and you believe that the price will not, which is very normal way. What for everyone we do that. So you put your stop loss around this place. So now immediately the price moved a little bit upward into profit for you. You are happy and you say, "Okay, it's okay," and then you left. By the time you come back, the price had already entered retracement and then went back, although a little bit forward, upward again, and then move down to hit your stop loss, because your stop loss is here and the price has already broken through your, so this one will not kick you out of the market. Then the price will continue. So by the time you comes back and say, what happened? This is not supposed to be a losing trade now, because you are looking to buy, because you know that the price is on the upward trend and it is still moving upward. But unfortunately, you had an encounter here which is not pleasant. So this is what we are trying to avoid. This is what we are trying to avoid. Don't enter into in the midst of the trend when you see that the price is moving upward. So many people will enter this from this place now. They will enter from this place, especially those who are stingy or those who have not enough money. They won't want to, like this one now. See, it retraces back to about 50. Some people will pick like 35 or 30, thinking that the price will not retrace back, will not even come back to this level. And see what happened. The price came back as far as 50 pips. So meaning that it is almost, when the price move like let's say the price move like 157, retrace with 50 pips. So almost one third of the movement. So you use that one for a retracement, and somebody may even pick that 50, and God helping you, the spread here may be as big as like a 5 or 7 or 10. Then you can't survive it. If your stop loss is here, you can't survive it. So these are the things we want us to always avoid. Now somebody will say, I've been trading, I'm not making money. It is as if really people are interested in your case. It is not so. What you don't know it. whatever you know, you have become master over it. But what you don't know is a master over you. They said the issue, anything you don't know, is in fact is wiser than you. It's wiser than you. So that is it for that. So now in our next class, we are going to go for the exit. So I will not say anything more than that until then. So I pray that we meet again in peace, and everything you have learned right now, please go and practicalize it, apply it even on demo. Don't go on your real account and begin to test. You don't test on real account, or even if you are going to test at all, use the minimum lot size, so that when anything goes wrong, it will be very, very minimal. And then it will also help you to develop confidence in yourself and in that trading system you put together, that is you are using to work for you. So by the time you develop that confidence, you'll be able to use it on your real account and make money, because you are confident with the market attitude, market structure, and market characteristics, how it moves, what usually happens in the market. When you know when this happens, this is what follows. This is when this thing happens, this is what follows. So those are the attitude and the characteristic of the market movement, especially what we call trend, which is also the direction. So see you then. If you are not subscribed to this YouTube channel, try and do so. That will help us to continue. It will help the YouTube also to introduce this channel to other traders that are also struggling with their trading career. It will then try, like, share, and then click the notification button, so that whenever we post any new video, you will be notified, and you quickly come here to be the first, to be among the first to watch this thing, and then apply it to any area that you are having difficulty in your trading. So I pray that all of us will have good and wonderful trading career. So see you later. Bye bye for now. Thank you for watching.